All right. Now I have like two or three terms that, just so maybe you could clear it up. What does an option mean?
Okay. So an option, it's funny you mentioned that. I've actually been studying options a lot recently. So an option is a type of derivative, which means that it's basically a contract that references a stock. It's not the actual stock itself. It is something that represents a stock. An option is a contract that gives you the rights to buy or sell a stock at a certain price at a certain time. So, for an example, we'll go with Coca-Cola again, since I mentioned it earlier. Coca-Cola right now is trading somewhere around $50 per share. Now, if you wanted to buy that stock outright, you would just open your app on your phone, go to your broker, put in the number of shares that you want, and you buy it. And that's pretty much it. Now, an option is a little bit more advanced. So let's say that I think that Coca Cola will go up to $100 per share in the next couple months. Now, I don't know that, and it's probably not going to happen, but let's just say that you did believe that. Now, one way you could profit from that belief or opinion is by buying a call option. So there's two types of options. There's calls and there's puts. So calls are when you think the stock is going to go up. Puts are when you think the stock is going to go down. So if I'm buying a call, let's say I say, all right, and we're getting like kind of deep into it, but I want to make sure it's understood that if you buy a call option, you're saying, I'm buying the rights to purchase this stock at $50 at a certain time in the future. Let's say it's 2 months in the future.
Okay.
So guess what happens? If the stock goes up to $100, well, I bought the right to buy it at 50. What does that mean? 100 minus 50, I got a $50 difference there. I just made money based on my belief that the stock was going to rise before it actually rose. So options can be incredibly powerful as a money-making tool for that reason, because not only are you saying that you believe a stock is going to move and you're profiting from that belief, but option contracts, interesting thing about them, you can only buy them in, remember we mentioned those round lots earlier about the way you used to buy stocks? Well,
Yes.
options are kind of the same way still. You have to purchase them 100 contracts or 100 shares rather at a time. So one contract equals 100 shares. So it can be a way to control, theoretically, you control a very large amount of money or stocks without actually owning the stock. So I would say it's definitely a more advanced concept. Definitely, if any listener is interested in options, like do a lot of research on it because it's more risky, more speculative, but you can make higher returns. So that's just a basic overview.
Okay. Now, just a question. What if it doesn't go the way you said it was going to go, like up or down?
Yeah. So that's a very good question, right? So let's use that example that we talked about with buying a call option for a Coca-Cola stock. Let's say that Coca-Cola was at 50, but it just plummets to 25. So you bought the right to purchase it at 50. So obviously you wouldn't exercise that right because it's worthless to you. But the interesting thing is, the only thing that you lose in buying a call option is the amount of money that you paid for it, which, when you think about it, is pretty amazing because you controlled 100 shares of Coke, but you didn't actually have to buy 100 shares of Coke. So all you paid is what's known as the premium, the option premium. And the option premium is usually much, much, much less. Actually, it always is much, much less to pay for that than to buy 100 equivalent shares of the stock. So you're out a lot less money if you go that route than buying 100 shares of Coke outright. So that's what would happen if the stock goes down against you. And it's kind of the opposite if you buy a put option, which is, a different scenario. So there are ways to mitigate risk. And actually what good traders do is before you make a single trade, you actually calculate out how much potential loss could I lose if this goes bad. And then you're also calculating the potential gain. How much could I make? And based on that reward to risk ratio, that's what's going to determine if you're going to place a trade or not. So that's what professional traders do, and is very important. I cannot stress this enough. Please do not trade stocks, particularly do not trade options if you don't know what you're doing first, if you don't have a really good foundation and understanding what the risks are. Because like you can just Google like the news stories, like people lose tons of money trying to do this stuff and trading options without really understanding the risks of what they're doing.